You're watching the charts minute by minute, your heart pounding with every green candle and sinking with every red one. You tell yourself you're an investor, but let's be real. It feels a lot more like you're pulling the lever on a slot machine that never, ever stops. What if the 24/7 nature of crypto markets wasn't just an opportunity? What if it's a psychological trap, a game designed to make you lose? This volatility triggers our most primitive emotions: fear, greed, anxiety, and leads to impulsive, irrational decisions. You know the cycle: the stress, the obsessive checking of your phone, feeling trapped and completely burned out. But what if you could just turn the noise off? What if you could transform this high-stakes chaos into a calm, disciplined, almost boring process of building real wealth? This isn't about finding the next 100 times gem. This is about a fundamental identity shift. It's about rewiring your brain to stop gambling and start accumulating. Today, we're going to tear apart that destructive cycle. I'm giving you the exact three-step framework to detach you from the charts and turn you into a disciplined, long-term Bitcoin accumulator. The first, most critical step is to acknowledge the game you're actually playing. Let's be honest, active trading, especially in the world of altcoins and meme coins, is engineered to feel exactly like gambling. The extreme price swings aren't just market noise. They are emotional triggers, and they are incredibly effective. FOMO, the fear of missing out, drives you to buy into euphoric pumps. Then panic and loss aversion force you to sell at the absolute bottom. Your mind is being hijacked. Greed tells you to hold on way too long, to ignore the warning signs and abandon your own rules. Fear makes you overreact to bad news and sell your positions, only to watch in agony as the market recovers without you. This emotional roller coaster isn't just stressful, it's a recipe for buying high and selling low. When a game is rigged like this, the only winning move is to stop playing. It's time to find a new one. This requires a profound psychological shift, emotional detachment. You have to learn to see Bitcoin not as a daily report card on your genius, but as a long-term savings account. The people who win in this space are largely unmoved by short-term price noise. They understand that volatility is just a feature of a new disruptive market, not a personal attack on their portfolio. So, how do you get there? First, practice mindfulness. This isn't some abstract concept. It's about training your brain to observe your feelings without being controlled by them. When you feel that jolt of fear from a price drop, acknowledge it. Name it. This is fear. But don't act, just watch. Over time, you create a powerful space between an emotion and your decision. Set a simple rule: no checking prices more than once a day, then maybe once a week. Second, start a journal. Document your trades, but more importantly, the emotions behind them. Bought here because of FOMO. Sold here because I panicked. This process creates a rational distance from your mistakes and makes destructive patterns painfully obvious. And third, establish hard, unbreakable rules. For an accumulator, these rules are simple. You will not react to market news, you will not deviate from your schedule, and you will not let social media hype dictate your actions. This isn't a trading plan, it's a behavioral framework designed to protect you from your own worst instincts. Psychology is only half the battle. You need a practical system that removes you from the decision-making process almost entirely. This is where dollar cost averaging, or DCA, becomes your escape hatch. DCA is the beautifully simple strategy of investing a fixed amount of money at regular intervals, no matter what the price is doing. For example, you decide to buy $100 of Bitcoin every single Friday. When the price is high, your $100 buys a little less. When the price is low, it buys more. Over time, this smooths out your average purchase price and completely dismantles the gambler's mindset. The gambler is always searching for that one perfect entry point. The accumulator doesn't care about the perfect entry. They care about consistency. This approach is one of the most popular strategies for a reason. It helps manage volatility and takes your emotions out of the driver's seat. But here's the most important part. You must automate it. Nearly every major exchange offers a recurring buy feature. You set it up once, $100 every week, and the system does the work for you. This isn't just about convenience. It is a powerful behavioral tool that makes discipline effortless. It takes your emotions, your biases, and your moments of weak willpower completely out of the equation. You can't panic sell if you never had to manually buy in the first place. You can't FOMO buy when the purchase is already scheduled. This automated system liberates you. You are no longer a trader glued to the screen. You are an accumulator, and your system is running in the background, patiently stacking sats while you go live your life. To make this truly powerful, you need a concrete mission. For instance, I will invest $200 every month into Bitcoin for the next 10 years with the target of accumulating one full Bitcoin. A well-structured plan like this acts as your anchor during turbulent markets, reminding you of your real objective when short-term fear is screaming at you to abandon ship. The final step is where you completely redefine what success looks like. This is about forging a new identity. A trader measures success in short-term gains. They live for the thrill of a profitable trade. A Bitcoin holder, or hodler, measures success by a totally different metric: the total amount of Bitcoin they have accumulated. Your goal is no longer to make money this month. Your goal is to increase your Bitcoin stack week after week for years. This simple shift changes the entire game. When the price of Bitcoin drops, the trader sees a devastating loss. The accumulator sees a discount. They know their next automated purchase is about to acquire more of the asset for the exact same price. This perspective transforms market volatility from a source of stress into an opportunity. As of early 2026, historical data shows this hodling strategy has been overwhelmingly compelling, even with recent fluctuations like the 6% decline in 2025. Holding Bitcoin over long-time horizons has consistently outperformed attempts to time the market, thanks to its innovative decentralized nature and compounding potential. Keep in mind, past performance isn't a guarantee of future results, and markets can change rapidly. When your time horizon is a decade or more, a 30% drop next month becomes almost irrelevant. It's just noise on a much longer journey. To fully embrace this identity, you have to change your information diet. Unsubscribe from the channels screaming about 100 times gems. Mute the accounts spreading fear and hype. Your focus needs to shift from daily price action to the long-term fundamentals of the network. Now, before you can comfortably become a long-term holder, you need a foundation of financial security. This means having an emergency fund in cash. You cannot accumulate with conviction if you're worried about paying next month's rent. That desperation for quick profits is the very thing that fuels gambling. Secure your immediate needs, and you remove desperation from the equation. Finally, for those who truly struggle with the fear of missing out on another altcoin bull run, you can use what's called the moonbag strategy. Allocate a very small, manageable portion of your portfolio, say 5%, to more speculative plays. This can satisfy that psychological itch to have some skin in the game, without ever jeopardizing your core Bitcoin accumulation strategy. Remember, this is for fun and should be money you can afford to lose. Bitcoin's strength lies in its long-term reliability, not short-term bets. Look, breaking the cycle of crypto gambling isn't about sheer willpower. It's about having the right system and the right mindset. If you're ready to implement a disciplined, automated strategy, the first step is to choose a reliable platform that makes it easy. I've put a link in the description to a few of the best exchanges that offer automated recurring buys. It takes less than 5 minutes to set up, and it could be the single most important step you take on this journey. Check it out after the video. Let's bring it all together. The path from a crypto gambler to a disciplined accumulator isn't about learning a new trading secret. It's a complete transformation of your identity. It starts with step 1, psychological rewiring. You recognize that the market is a psychological minefield, and you learn to achieve detachment. It's solidified with step 2, a practical, automated framework. You implement dollar-cost averaging and, crucially, you automate it to remove your own flawed decision-making from the process. And it's sustained with step 3, Building a holder's identity. You redefine winning, not by short-term profits, but by the total amount of Bitcoin you accumulate over the long haul. This journey demands discipline and emotional control, but paradoxically, it requires far less active work than trading. You are shifting from a player at the casino table to the owner of the asset itself. Stop watching the charts. Stop letting fear and greed control you. Set up your automated system and go live your life. That is how you win.